Good evening and welcome to CreditSpreadSlayer.com Setup Sunday. As always, I'm your host, Jason Daig, Senior Portfolio Manager here at the Credit Spread Slayer. Today's going to be a special request night. We've actually received an email asking about the listener's specific position. So we can't give individual financial advice, but we can always take a look at a chart and see what we see happening on the actual charts. In this case with TMV, it's actually the 20-plus year Treasury Bear 3X ETF. So basically, any move in the 20-plus year Treasury ETF, it's going to be the bear portion of that times 3. So they accomplish this by rolling futures contracts and basically levering the entire position up dramatically. So this is not something you're going to hold for a long period of time. Your average hold time on something like this should be anywhere from 1 to 4 or 5 days. Anything after that, you tend to start having roll risk involved. And we can do a whole episode on roll risk at a later period in time. Now, if you take a look at the chart, we have a weekly chart that goes all the way back till mid-2012. As you can see, TMV's been stuck in a downtrend ever since August of 2013. And it's not looking like it's going to stop. Right now, we had a huge down week from $62 all the way down to $58 that you can see that big red candle. Based on previous trading, we could expect a consolidation candle next week that'll most likely finish inside that down candle if we don't move completely lower on Monday morning. That black circle you see is where you'd be looking at an opportunity to short the TMV, where you have a stop loss up above those 3 closed positions right around 62. Before you might have a quick move up to the 65 area. So that's a 3.41% stop loss to the upside, but it's actually opening up an 8.6% downside profit potential if TMV gets all the way back down into the blue support downtrend line. Now that was if you would do a simple short position. You could actually also turn this into an options trade and synthetically do the same exact thing for either a net credit or maybe a slight debit, but you could actually sell a $63 or $65 call for about a month duration and buy a put at the $60 level. You'd probably do that in a 2 or 3 to 1 ratio in order to get that into a more realistic trade. But that would give you full downside potential profit, and you'd start losing money and the trade would become worthless, or the trade would become losing money anything above 64. Credit Spread Slayer will not be taking any specific position in here, but we always like taking care of our listeners and our followers. So this was TMV. We are definitely bearish on this, and we're expecting to see 55.50 within the next 2 to 3 weeks in this security. Thank you everyone for following CreditSpreadSlayer.com, and be sure to check out our new ebook that we've posted, 5 Tips to Weekly Option Trading Success. You can get that right at CreditSpreadSlayer.com on the right-hand side. Thanks for listening, everybody. Again, my name is Jason Daig, Senior Portfolio Manager, CreditSpreadSlayer.com.